Morning all, how are we doing? Morning. Morning Steve, morning Jane, morning Stevie. Morning from sunny Spain, eh? Blimey. Not to be in sunny Spain, I'm in freezing cold England with the heating on. Morning Wired, welcome. Excuse me. Right, so I'm always late on a Friday, Thursday. It's a Thursday, wake up. I have a spin class at 6:30 and I don't get back until pretty much ready to go live. So I'm always in a flap. Morning, Peter. Lots to look at today. End of the month coming up, obviously. 30th tomorrow, last day of the month. We quite often get a quite a strong move towards the last couple of days of the month as the market sort of reaches for targets it needs to hit for bonuses, etc. So we could have a couple of pretty volatile days coming up. Obviously, we can have a volatile day anytime at the moment because everything's completely nuts anyway. But anyway, we'll see. Where are we? January, February, March, April, May, June, July, August, September. We are also end of quarter. So we'll have the quarterly reaches as well. So we quite often will get a busy couple of days coming up. So any fast, hard trends you see starting could well continue. So these sorts of moves, when we get them, they tend to trend hard when we get these days, and you get a couple of hundred ADR moves and you get out way too soon a lot of the time. With what's going on at the moment, obviously, that may not happen this next couple of days. We always quite often get a rally, as I say, at the end of the month. But with what's going on with the markets at the minute, with the pound especially, and what's happening with the yen tomorrow, we've no idea, obviously, what's going to happen. So we will see. So have a quick look at news. Morning, Andy. Morning, Antonios. Today we've got GDP for the CAD at 12:45. We've got Swiss Governor Mackler speaking. Where's that? Due to speak at a conference held by the Bank of Lithuania. Okay. It's not often we get an SNB talking head. So that might be worth keeping an eye on that around 12:45 today, especially for the Swiss franc, obviously. We don't get a lot of talking heads from the Swiss. We might get some indication as to what they're going to be doing with interest rates coming out of that. So we might get some red news pop up on financial juice, depending on what is said there. So it's worth keeping an eye on that one. Don't often see him talking, him or her. Don't even know if it's a male or female. So yeah, keep an eye on that. GDP for the CAD, 130. GDP figures are reactionary. We will get usually some movement off of it, but it doesn't tend to be a massive one. So, morning, the Armand. Morning, Potgeiter. Good name. Yeah, and then we've got Governor Orr speaking as well. He should be asleep. Oh, that's at Lithuania as well. Oh, okay. So they're both speaking at the same place. That makes sense. And then we've got Bullard and Mester as well. So lots of talking heads. Morning, Themba. Today. So obviously talking. It doesn't matter what colour that is. If they say something out of the ordinary, we will get some movement. So just be aware there might be some volatility coming off the back of that. And tomorrow we've not got a lot of news apart from US dollar PCE, and we got more talking heads as well. We got Michigan sentiment tomorrow afternoon as well, which doesn't tend to do much either. So this is the busiest part of the week for news. We've not, this week's not been a very news heavy week. We've had a hell of a lot of movement, obviously, but nothing to do with actual scheduled news. So be aware of those. Overnight, I haven't scanned this yet. So bear with me. Inflation calls for a significant rate hike. Something similar to the last two hikes is appropriate. I don't think it is, Muller. Otherwise, your currency would have peaked, but it didn't. Anyway, you carry on. We'll keep short in your euro. Truss said this morning, I saw on the news as I quickly rushed in the door, they are not interested in changing the mini budget that we had on Friday, which caused the collapse in the pound. So basically, they've said, no, that's what we're going to do, and we're sticking by it. So basically, obviously, I would expect the Bank of England to come out today with a counter policy, again, to try and combat that. So we will see. So I've just got US dollar Swiss running on my funded account, which I need to watch. Halfway to TP, I just want to break even. I just want to stick a break even on it because I've got $360 profit on it. Choice rate hike 75 basis points, 50 is a minimum, right? Okay, so that's fine. So yeah, this is what I would expect to come out of the ECB in October. If they do that, the market's not going to be impressed at all. I'd be very surprised if that was even forecast. That's what they need to forecast, and that is what they need to deliver to have any chance of getting some strength coming through. So what happened with Japan overnight? Bank of China warning, onshore yuan gained for the first time in 9 days. What's that mean? Strongly worded sentiment stating the speculators will most certainly lose money in the long run and that key market participants must protect the authority of the fixing. Anybody know what that means? What's the onshore yuan? We never trade the yuan. We just don't get involved with China. So I'm not familiar with any of that terminology. So anyway. Asia's not doing well. We know that because the Aussie and the New Zealand are collapsing. So business as usual there, I guess, is what they're saying. It's a warning. US officials Treasury is watching the UK turmoil with increasing concern. Here we go. This is what worries me about the talking heads today. There's a lot of the questions coming out of this conference today are going to be very, very pound oriented. What are you going to do against the pound? What are you going to do with bond purchases of the pound? What are you going to do X, Y, Z with the pound? So I get the feeling we might get some volatility today. Not about, there you go, that's what I was saying. UK Treasury Minister, that was what was on the news this morning when I saw it. They will not abandon its tax cut. They're sticking to what they said, which is wrong. Policy of 4.5, 4.5, 4.75. Right, so there's nothing major that I can see overnight. We've got 1 minute to the open. Let's just watch the open. DAX. Blimey. That's a hell of a gap, isn't it? I was just going to say, I was looking for a short on the DAX today. Might change my mind on that at the open. That's worth a long, isn't it? At the open, right? It's worth a shot. Going long. The gap fill. I'm on the US 30. Whoops, that was a stupid mistake. Hello, morning. Christ. That will probably go the same way anyway, but let's just watch this open. Just going to stick a buy stop above that high. I was looking at it thinking, why is there a 100 pip stop on the DAX? That's not normal. And it obviously was on the DAX, wasn't it? Andy, YouTube rendering not great today. Is it just me or is it blurry today? No, it looks fine. It doesn't look blurry to me. I don't know if anybody else is seeing blurry, but it looks all right to me. I'm just going to stick another buy stop. So want to want to break it as well. Just going to place that on my funded account as well. Morning, Neo. Maybe hit the refresh button, Andy, if you're getting a delay. Seems okay though. So a bit of a reluctant open this morning. Just testing the lows. Good place to buy at the lows there. See if we get a pullback off of this low. If you want a really, really tight stop loss trade, just there, where we are right now, tiny little stop. See if we double bottom the open. Tiny little risk. Yours looks a bit blurry as well, Stevie. Maybe it's because you're in Spain. It's certainly not blurry, look. I mean, it's slightly blurry, but I mean, it's not. 1080, 1440. Yeah, it's 1440. Don't know. I don't know what to say, guys. Systematic trading. Good morning. I know the result of the market reverse. I know that the result of the market reversal depends on the user, but I was wondering if you are still using it, and if so, how's it going? No, I'm not trading at the moment. Not position trading at the moment. I'm taking this week off while all this craziness is going. I'm the Steve in Spain. It's fine here. Yeah, sorry, wrong Stevie. Stevie's somewhere else. Stevie's in America, I think. I lose track of where everybody is. Right, so we've broken to the downside. DAX. US dollar's pushing. My US dollar trade is Swiss is going nicely into profit. We're just retesting the highs on US dollar Swiss. On the 5 minute. Wow. Okay. DAX is not interested in longs at the moment. I'm going to leave those buy stops in place in case this is just a false move at the open. US dollar's strong, so indices will be weak, obviously, as you can see. So we'll see if that US dollar Swiss holds that breakout. If that does, wow, that's really weak today, the DAX. Another down day by the looks of things. Wyatt, which company do you have funded account with, and which ones do you recommend, please? I'm funded with my Forex funds and E8. E8 funding and my Forex funds. Also, well, I'm not actually, at the moment, I'm not funded with Apex for futures. I use Apex. The problem with futures is, well, the problem with Apex, actually, with futures funding is it takes a long time to get paid. So I find I'm just focusing on CFDs. I trade futures very much the same way as I trade CFDs, except I use Jigsaw, which is heat mapping tool, which gives you a little bit more of an edge when you're trading futures. But in futures, I'm scalping for pips at a time, whereas in CFDs, I'm scalping price action. So it's a different type of trading. But my Forex funds and E8, both of them, very fast payouts, fast evaluation, nothing wrong with them. Been around long enough to big decent companies to trade with. Just gonna be careful of the intraday drawdown, that's all. I don't really want to short this DAX this morning. after this bull day yesterday, if you look at what we had yesterday on the DAX, we didn't quite manage to close above the open yesterday, but we got there basically. So this to me is near as damn it a bullish engulfing. I'm looking for this pullback rally to start. So with the DAX, after we get these big flushes, we get obviously the profit take move off the flush, which is what started for me yesterday. The fact that we gapped down so hard today, I was expecting a gap fill and run for the highs, which we might still get from down here, just north of Murcia. My mum used to have a place in Murcia, just while you're talking about Murcia in Spain. So I'm quite surprised we've got such a weak open. We have got a strong dollar, which is going to be dragging the US indices down. So the US indices will be coming down as well this morning. So if it decides to flick. So the DAX is being dragged down, I think, by the US indices rather than the DAX here. So we need to see what happens with the US dollar this morning. We might get that US dollar starting to weaken, in which case then it'll give it a little bit of a breather, and we can get this upward move on the DAX. But I'm certainly looking for some kind of pullback. I don't think it's too soon either. You look at the distances travelled so far on this downward move. I know this is a much bigger one, but obviously this was, the big start of the big next leg down. I think we should be getting 2 to 3 days of a pullback. The market obviously disagrees at the moment, so I'm going to leave that. I don't really want to short it all the way down here. It's very, very, very extended. We just started to come out of extension, so what I'm looking for here after this reversal is a retest. I would assume that was going to be it, but it's not. It's dropping. So shorters market this morning at the moment. So I will leave that. I might. There's an opportunity for a really decent profit on this if this does go for this gap fill, because that now is pretty much 3/4 of an ADR, which is a big move. If it decides to grind up there, it's something you could get into and hold. So what I'm going to do, I'm just going to cancel those pendings off. I'm going to put slightly larger stops on. All right, I'm going to take 3 buy stops. Whoops. One up there. One at the high of the opening range, and one there. But they're quite wide stops. 660 pip stop, 60 point stop. I just want to see if this is a fake move. If this is, we're going, in which case I do want to be starting to look to get out of my US dollar Swiss long, which is now $560 in profit. Okay, so it's a fairly bullish candle there. Sellers ran out of steam at the opening range low. So this candle really will tell us whether or not there are buyers in the market. If not, we might just collapse straight back down again. We'll see. We'll keep an eye on that. ADRs today, for the first time in a while, nothing, thank God. So no ADRs so far this morning. This is the first day, I think, this week we've had no ADRs hit by the time London opens. So quiet overnight in Asia. Although I say that it was quiet overnight in Asia, there was still a fair bit of movement, which we'll look at in a minute. So yeah, decent movements there. Weeklies, I know it's Thursday, but we can't really play these this week. This market is all over the gaff this week again, second week on the trot. So the weekly range is not really interested in. There's no 4-hour RSI extensions anywhere because we've had a lot of stuff which has been screaming in one direction, undoing itself. So the RSIs, as you can see, like with the DAX here, where we've been extended this week, we're pulling back at the moment. So there's no RSI extensions to look at there. And the hourlies we'll have a look at. The only thing we got extended on the hourly is New Zealand dollar yen, which is a decent entry. That's not extended on the hourly. Oh, no, it's not. Sorry, it was just loading data. That was previous data. So there's nothing extended on the hourly either. There you go. Right, so there's nothing to look at. So we'll do a quick overview of all the pairs this morning. And we'll go through everything and have a look at where everything is and where we think things are starting to go. That's still coming down. I'm going to hit target on my US dollar Swiss, which is very nice. Well, hopefully I'm going to hit target. $800. I just stuck a trailing stop on that. It's bought at the lows. I bought basically here yesterday on this reversal. So we've got a reversal on M5 there and a retest, which you can't really see. Well, sorry, this was the retest here. We came back down, double bottomed, stop was under here, so I nearly got stopped out on it, but it ran in Asia. So target is basically in this accumulation, but I've got a trailer running on it just to lock some of that profit in. But it's a nice little trade, that. 900, basic $900 TP, so that's me done for the day if that one hits. $400 to $1,000 a day really is what I tend to aim for. Normally $400 because that's enough, more than enough. When I build it up to 4K, I tend to stop the account and then empty it and start again. Right, so let's carry on. So there's nothing to look at on ADRs or RSIs. This was the opening balance move this morning. Since the opening balance, we've had very little follow through on this. So US dollar Swiss is pulling back as well. I've got $600. I'm banking that. Sorry. It's too much. It's too much money to leave on the table this time in the morning. $600. If that US dollar collapses, I've got a feeling we're going to get some bullish action on the indices this morning, just because where we are with the DAX at the moment. And if that is the case, that US dollar is probably going to pull back. So I'm just going to bank that 600 because hey, why not? $600. And at the moment, I'm pretty much earning £600 every time I earn $600 because we're nearly at parity, which we'll talk about in a minute. So this is what I call the opening balance, the cash balance, cash open, whatever you want to call it, which is basically, well, as soon as the market opens, this is the initial flurry of orders that are placed by the market participants. So these will be the overnight orders that need to be placed, customer orders, and it's basically it's getting your work done, if you like, stuff you've got to do. You know, Barclays have said, Microsoft has said to Barclays, we'll want to buy X thousand shares in whatever, and this is just executing customer orders. Then we start the speculative move. The speculative move, obviously, is what we're interested in, which is where we're going to go for the morning. But at the moment, it's very difficult to tell. It looks bearish, but this is not very strong bearish move at the minute. We've got this 10 minutes where, yeah, it does look like it's going, doesn't it? Might regret getting out of that US dollar Swiss, but anyway, money's money. But we'll see. I'm going to hold that position. So basically, if we break back inside the opening range, I will try along. Hopefully, my stop will be under the low and see if we can go run this gap. Bill, I'm quite surprised we've got a gap down at the moment. You know, these gaps, you know, the gaps don't last that long, especially after a 12-hour pullback. I'm quite surprised we've gapped down and we wouldn't go for that this morning and try and get back up into this area here. So watch that. I'm going to watch it on my other monitor. I won't bore you with it. Right, let's look at the indices anyway. So US dollar, DAX, as I said, we're in the realms of we need a pullback here. We need a pullback. So I'm looking basically to start some kind of pullback this morning or in the next day or so, really. But yesterday was when I thought we were going to try and get that move started. So even if we get a bear candle, in a pullback, you don't have to have a bullish candle, like this one here. That's a bear candle, but we are still in the pullback. So you will get up days followed by down days. But even the down days, once they reach down, will pull back. So, that sort of movement today, I'd be very surprised if we challenge the lows at ADR today. But I might be wrong. We'll see. But so looking for pullback there. We have taken out the lows. Yeah. So this candle, obviously, last week was convincingly slammed straight through. Not interested. Came back up, retested it, and then flowed back down again. So we are down at these lows. So I'm looking basically for a pullback drop. We might just pull back into this area, in which case that's kind of been done with the the Tuesday candle this week. So we will see. NASDAQ, we still didn't get that level tested yesterday. We were very, very close to testing the low, testing the double bottom. We didn't get there. And again, obviously, we had that big down day, and we've been really, 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 really bearish. So I was looking for the bounce and pullback. We didn't quite get it on that one yesterday either. S&P, beautiful. This is exactly what I was looking for, this play. Yeah, the bounce off the support. So the S&P gave it to us. And again, this is where I would expect today to at least come and challenge those highs, if not break them and go, which is not what we seem to be getting this morning. Dow, we know, obviously broke down, very similar to the DAX. We'd already broken the support. We broke back above it yesterday. So again, it's all bullish based on yesterday's move. So you two talking about Spain. I've been up in Benidorm this weekend, letting down the hair I don't have. Benidorm. Oh, that's so full of Brits, isn't it, Benidorm? So full of Brits, they made a TV program about it. So indices, obviously we're bearish on them. We're still miles away from where we're heading on a lot of these, apart from the Dow. The Dow's the only one that's hit the pre-COVID levels and actually slammed it. So everything else, we're not there yet with the S&P and the NASDAQ. So we're still looking to target pre-COVID. And then obviously, depending on what happens with recession, this is going to get a bounce, but not necessarily going to be a bounce and rally. It's going to be a bounce. And then depending on how the world is at the time, we will do what we want to do. So plenty of downside still on these, obviously, but the market does need to breathe. So I've got an eye on bears on bullish moves today, but I'm not going to push it. We'll see what we get. But at the moment, we're going down. That's not far away from ADR already. So say not far away. It's it's half an ADR away, but we're well on the way there, aren't we? Wired, I can't open this signal D40 cash in MT5. It's the DAX. D40 cash is the DAX, German stock index. It'll be called D30 maybe, or DAX, or Germany 30, Germany 40, D40, D30, DAX, one of them is what it will be called. Wow, that is a flush and a half, isn't it? The US dollar Swiss, however, is rolling over. So it's just a massive market flush this morning. What's going on? News is interesting. Okay. So that's indices. So yeah, we'll see today. If we get ADR hits to the downside on the indices today and we come down and challenge anywhere near the lows, I should be looking to buy down there this afternoon, but we'll give it time. I get the feeling this might turn into one of these candles here today. So think of where we are right now. Yeah, open, push down at the open, push up in the afternoon. So there will be your wick, and then we'll finish like that today. But we will see. So I'm going to keep my eyes on that for signs of exhaustion, see if we get any bullish. I'm going to switch down to M5 on my other platform, just so I can watch where that's going. Right, so that's indices. We'll have to wait and see what they do today. Oil, we've had a 2-day rally on oil, which was long overdue. There's not any reason really that I can see why we are rallying from where we are rallying, but this low has held. So if you look at this low for the last 3 days, we're not interested in breaking that level. So I think potentially, remember I was saying we've got this high which needs to be broken, which we did quite convincingly yesterday afternoon. We rallied very, very hard, which was lovely. But the problem we've got with oil is this 5-day consolidation here. We've got to get through that. So there's this nice area of balance where the market was very happy to trade. We kept tapping up into resistance and popping off of it. We weren't interested in going higher, and then we finally obviously broke down again. We got down to the $76 a barrel. We've now hit resistance this morning. So it remains to be seen whether this is going to be a pullback and push. So we've got a nice reversal pattern there, reversal alert. We're looking for the retest this morning. So pullback, if you're going to go long on oil, this is where you want to be doing it, somewhere in here. Obviously stops down here if you're going to use a stop. If you're position trading, this is where you're going to get in. And then we need to see how we get on here. So it's going to take a couple of days at least to get through this. You know, this is 125 ADR in this area here. So it's going to be very tricky to get through. We're going to be hitting that. And obviously we're hitting that in a bear market. So there is every opportunity for this to continue on its way down. If you look at where we've bounced here, it's kind of that level, but it's not really. It's kind of this level here, which is the level I sort of pointed out yesterday. Is, you know, this is an old level, but it's weakish. So this is where I would be interested, much more interested in purchasing down here. So this zone from this low up to these highs here. Yeah. So somewhere down there, if we can get down to here, which is like your 62.50, 62.50 to 62 to 72.50, $10 range, somewhere around there is where I'd be really interested in buying this, because we are, you know, we've been held down in this trend for a while now, and the market it can't sustain these drops that long. But you look at what we had previously on this, yeah, we get it's so orderly, and this is, I love this this for a trending instrument to position trade. Yeah, it's respecting it's respect of the 24 and the 72 is absolutely lovely. Look, yeah. So we flip down, push back up into the 24, pull down, push back up into the 24, pull down, back up into 24, back up into the 24, back up into the 24. 24 doesn't hold, the 72 holds, back up into the 24. That's where we are now. So this is exactly where I would start a downtrend move. So you need to decide whether you're bullish or bearish on oil, whether you think this is as cheap as we're going to get. If you are, then as we pull back into here for the retest of that reversal alert on the hourly, you want to look long. If you're bearish, you're in on that reversal alert now. So, you know, you need to make your own mind up on it. It's very difficult to tell what's going on with oil. It's very difficult to tell what's going on with anything at the moment. This is why I'm not position trading, because I don't have any real clarity at the moment, especially on the pound, obviously. But I'm still waiting for that yen announcement tomorrow, assuming they're going to do it, to find out what the intervention is and how it's going to work. So as soon as that is all over, that news is over, we'll have a look at getting back into some positions again. So no, I was just going to say the DAX, we're potentially forming an inside bar at the moment. We've still got a couple of minutes left. I was watching this pushing up and literally doing that for a bit. If we hold this low and we don't test this low, we've got an inside bar, which is obviously a pause bar. So it might be a good opportunity to scalp long from here. So I'm just going to watch that. No, it doesn't look like we are. New lows again. Well, it's trying anyway. New lows. Okay, fine. Carry on. Jeez. Short from heaven, that, isn't it? Not one reason to get out of that short yet, have you? Anyway, I'm not sure. So, big news yesterday. We'll run through all the pairs. I'm going to start off with the pound pairs. Big news yesterday was obviously on the pound. Bank of England intervened yesterday and announced $65 trillion of trillion dollars. That'd be nice, wouldn't it? Morning, Rocky. Morning, Sammy. Didn't see you there. Yeah, $65 billion of intervention in bond purchase. So the Bank of England had to step in to prop up the pound yesterday. And they did so without telling us, again, which was lovely. No warnings, but they just said, this is what we're going to do. We got a massive whipsaw move, which took out the high and the low. And then we started to push down. I shorted this on my funded account and got a break-even stop out on it, unfortunately. I've got a short running on this account as well, on the pound US dollar. But all the market did yesterday off of that bond purchase news was whipsaw and come back to where it was. So, and as I said, this is what I think we are going to have until the yen announcement tomorrow, or until there is some other intervention from the Bank of England. That was the intervention. That is all they could do, and it hasn't done anything. So I can't see any reason why we should not get the pound devalue from here and head down for parity on the pound US dollar. So this is the whipsaw on the pound US. It was an absolute textbook. Yeah. So if you want to see a stop hunt in action, this was the ultimate stop hunt. Yeah. Everybody that shorted from Tuesday got taken out. Yeah. Why are you not duplicating? Oh, God's sake. Drawing tools sometimes in MT4. I'll draw another line, screw it. Yeah. So if you'd longed it from late Monday in the New York session, or you'd shorted it at any time during Tuesday, or you'd longed it at any time during Tuesday, they did literally all your stops, all your liquidity on both ends of that within one candle. That is a double-ended stop hunt. That is a typical news manipulation. So the banks basically took everybody's money, stuck it in their portfolio, and they now have a bias. So they shorted. What did everybody do? As soon as that happened, including me, we went short. Stopped above the high. Yeah. I had a break-even stop after we pushed down, so I got stopped out in here somewhere. But everybody that didn't basically went short there because obviously they saw the pound collapsing. They saw this happen. They went, oh, the Bank of England's intervention hasn't worked. We're short it. Everybody went short, put their stops up there. So they came straight up in New York and took the lot. So yesterday, the banks took everybody's cash and are now sitting there pretty ready to go. They have got a move to make, and it's impossible to tell whether their book is balanced long or short. I suspect, based on that, obviously we're balanced short, but because it was an intervention from the bank, it may not be. So I'm still short bias. I can't be long bias on it. I'm really glad I didn't take that signal then. I was just looking at the DAX while I was talking then. We made a new low. This is the inside bar I was looking for, which we didn't get. We got a lovely lovely hammer there. So watch this candle. Everybody's gone long here, obviously. On that, everybody that's intraday has gone long there, and they've just taken all their liquidity there. Okay, so if we get another tail form here, I suspect we've got a long play on our hands. So I'm just going to move one of these buy stops down. Take that one because it's absolutely miles away. I'm just going to stick it there for the minute, but I'm just watching this to try and get in long if this becomes bullish, which it may not do. So yeah, still short. I am short on it, obviously. My stops were here above yesterday's high because this is where I started my short position. And obviously I've added to it as we've gone. So got in here, added here. I had another position on a break of the lows, which they kindly got me into here. And obviously all my stops are sitting back above the highs there. So today, that's what I'm looking for. But we will see. At the moment, it's very difficult to tell with what's going on with the pound, apart from the fact, obviously, manipulation. So I don't think we're going to get any more intervention from the Bank of England. They've done the intervention. It's going to cost us an absolute fortune. So what they've done yesterday is the government screwed the pound. And by screwing the pound, they've guaranteed much larger interest rate rises coming. They've hurt the possibility of higher inflation by their intervention. So what the Bank of England have had to do is counteract the extra 4% interest that they are going to be paying on the debt from that tax cut by selling $65 billion worth of bonds, which is basically what the debt went up by on the interest of what they screwed up on Friday. So bank screws up Friday, government screws up Friday, pound collapses at market open on Monday. We have that pullback and then bank intervention, no positive follow through. So for me, that is saying, the market is saying, yeah, well, basically what you did here, you've not managed to undo that, have you? You've just cancelled out the debt, but the debt is still there. And now you've got no tax income. What are you going to do? How are you going to make money? We're stuffed. So the fact that Liz Truss has come out this morning and said we're not going to change our mind on it, I don't think the market's going to have any confidence in it. So we didn't get much of a bullish close on that. So we're still making new lows. And we've just about made a new lower high there. So we'll see where we go here. If we make a new higher low here and form an inside bar, this could be the slowdown ready for the reversal. So just watching. Just going to pop that down there. I'm just going to adjust a position I've got ready on the funded account as well. So this will basically become your reversal alert. If you're using the reversal alerts indicator, that will become your reversal alert there. So yeah, bearish pound. still. But there is, when you look at this on a higher time frame, this is where we started the collapse, obviously. One of two things tends to happen on a move like this. We either get that V-shaped recovery, which we haven't got, or we get a pullback drop, or we get an accumulation push. So the 24 will come down on top of price. So price will either pull back to the moving average and drop, like that, or we will have, like this, an accumulation where it comes down on top of it and then price comes down. That's obviously didn't come down there, but like in this case here, for example, yeah, we're going to do that. Moving average comes down and pushes price down. So we need to see what's going to happen. There is every possibility I'm going to get stopped out on this position and we're going to have a pullback up to this area here, I suspect, before we come down. But, we are so close to parity with this. I'd be very surprised if the market was not going to reach for this level. And I'd be very surprised if the banks didn't balance themselves short yesterday, ready to do that move. Yeah, there's a lot of people making a lot of money shorting this. They even had to explain it on the news the other day. They were saying there's a lot of banks, a lot of institutions are making a lot of money out of this pound collapse, and they had to explain how you short something, which I found very amusing. Watching the news, people were explaining how to trade, what a short position was. But yeah, you obviously don't forget the banks will be doing that. They'll be selling their pound reserves and buying up US dollars, basically. So, we're so close. I don't think we won't come down and test that area. And it'll be the same as when we did with the euro US dollar. When we test that parity level, we'll get a bounce. But same as the euro, yeah, that isn't going to hold. It's not going to hold against this US dollar at the moment when we get there. So the question is, right now, are we going to pull back, accumulate, or run? That's what we will hopefully get some indication of in the next 2 days. So if we start to flag down here, I think we're probably seeing the highs on that bank intervention. I think that's probably it. We're not going to break that level and we will just drop. If we do break that level, obviously, then I think we're just going to flag and then we'll drop at some point. But again, that's not in our control. None of this is in our control. Sammy, you found a new glitch in trading, have you? Are you taking the mickey? The matrix, my interest on S&P is 36.40 for a buy. Yes, 36.38 is where I am. So yeah, somewhere around there. We'll see. But yeah, we'll see. I'm surprised we're dropping at the moment. That's the initial propulsion gap on that move. But for me, personally, a propulsion gap formed without a break isn't really a very good propulsion gap. So if this had done that, this drawn all over it, if this candle here had closed up here above that high, I'd be paying much more attention to this propulsion gap. But because the propulsion move didn't manage to break recent highs, it's not really, this is wide range bar theory, it's not really that strong. Some people call them FBGs, but they were copied. An FBG is just a wide range bar, and somebody came up with that many years before the person that named that FBG. That's for your information. And this is why this is called the WRB hidden gap indicator, because the original guy that invented the wide range bar, that is his rules. Accumulation, push that breaks a high without a pullback to the start of that move is a wide range bar. This one didn't do that. So although it is obviously a propulsion gap, and we know there's buyers here, I think that one's done. So yeah, somewhere around here is a good area to be getting in. assuming we are going to go, with market structure obviously has shifted to the upside. So it's assuming we are going long, but this market at the minute, who knows? I will only tell you about it, Lee. I don't want any leaks. Okay. Short about the glitch is closing the charts. Don't over leverage and let your trades play out. Lethal glitch. Matrix broken. There you go. I still haven't heard from my friend Rocky, who's in here this morning. He hasn't sent me a strategy, but it's a glitch. Dion, my mother-in-law, 84-year-old, was asking me last night how I could sell something I didn't own. Trying to explain shorts to non-traders is fun. Yes. I regularly have these conversations with my wife. And I can see her eyes glazing over and reaching for her iPad to do shopping online. But I talk anyway. What are my thoughts on the markets? Are we seeing bullish market soon, or is it going to continue bearish? That's a very broad question. The markets, which one? There are hundreds of them. We're not seeing a bullish market anytime soon. We're going into a recession. So, look at you. This is a bear market. Yeah, this is going to remain a bear market. This is the biggest bear market we have had. Well, you can see this is the biggest bear market we've had. Let me just end the conversation there. Biggest bear market we've had since the Great Depression. Yeah, look at the S&P 500. We have the occasional pullback. We have the occasional big pullback. We have the occasional financial crisis. Yeah, COVID is an anomaly. Yeah, that's not a bear market. That's a what the hell is going on in the world? We're all about to die. And now compare all of these. I would say that's probably the biggest. Let's measure it. So 2,700, 2,700, 1,500. There's a biggie there. That was a collapse. 3,500. Yeah. COVID. We are 12,000 points down. Yeah. This is not a normal situation. This is a bear market leading into a recession. We haven't even started the recession yet. So, if you're longing this, you're longing counter trend against a pullback of a continuation that could start at any time. So obviously, we know the markets move in waves, but picking the wave at the moment, like we're trying to do here, I'm trying to catch a falling knife here today. I'm expecting that to start. Yeah, I'm expecting this to start, but quite whether it does or not will. Wasn't expecting the pound to collapse to the lowest point in 40 years, but it did. There's a lot of crap going on at the moment. You don't want to buy anything. Unless you're buying something like the US dollar, Swiss, like I did this morning. Yeah, buy that. Buy the US dollar. Fine, because it's going to be strong, but everything else down. Right, so there's the indices, there's gold covered. We're doing this really slow, aren't we, today? Pounds, all these pounds, basically, I'm steering well clear of everything but the pound US dollar at the moment. It's impossible to tell what we're going to get moving forward and when it's going to happen. This is a glitch. So the volatility on the pound is obviously going to increase, I think, over the coming weeks. And I say I'm looking for a downward movement on everything, but the US dollar, pound US dollar specifically, is bearish because the US dollar is so strong at the moment, and we're so close to that parity level. So the market just obviously wasn't expecting to have a 2-day collapse. Look at the distance we moved. 943 pips. The biggest 4-day drop we've had prior to that has been like 670, and that was big. That was a 2-day collapse, sort of Virgin on Black Swan event. So a lot of pension funds very nearly went bust yesterday. This is why the Bank of England intervened. There's a lot of pension funds about to go bust. A lot of people were about to lose everything, so they had to step in and sort this out. So there'll be stern words from the Bank of England to the government at some point today, I'd imagine. But yeah, all of these are shorts and have been shorts for a while. Pound yen also massive short. So the yen intervention obviously was announced. It all happened at the same time on Friday and Monday. Just all happened at the same time. So the intervention on the yen is coming. The market loved it. They were very, very bullish yen. Just had US dollar CAD hit ADR. Should have helped my US dollar Swiss. Never mind. So yeah, be very careful with yen, but I'm looking for short opportunities on all yen pairs. Pound Swiss, again, same thing. Everything short on the pound. You want to be shorting the pound against something strong. If you want to know what's strong at the moment, okay, OPEC's looking to cut output for October. If you want currency strength, there's always one in financial juice. Obviously, this is daily currency strength, so don't. It's just what's happening today. This will change on a daily basis, so it's not particularly great. You want to look at a weekly one, really. That's interesting. So, what impacts that had on oil? When did that come in? At 8:38. Yeah, see, this is bad. Look, we get a negative reaction to that news, which is cutting oil supplies, which drives oil prices up. Why is it coming down? Nothing is making sense with oil at the minute. It's confusing the hell out of me. It really is. Anyway, explaining shorting to your non-trading family. Yeah, it's always good fun. So yeah, all the pounds short. Just when is the impossible thing at the moment, timing. So you pick something that you know is going to be strong. Yen is going to be strong. US dollar is going to be strong. New Zealand is weak and Aussie is weak at the moment. The CAD will strengthen along with the US dollar. The Swiss is also strong. So I would short everything pound, not obviously all at the same time unless you really want to over leverage your account. US dollar Swiss hit my target. But yeah, I don't know when it's going to happen, and obviously it can happen at any time. There's always the thing in the back of your head saying Liz Truss and Kwasi will come under so much pressure. Either Kwasi will resign or Liz will go, okay, we won't do the tax cuts and we'll fly. That's also a possibility. Yeah. So we'll see. But all those pounds, looking at the moment as it stands to short them. You can see how weak the Australian dollar and the New Zealand dollar are. Yeah, the pound is massively weak at the moment and it's beating them. So, there are instruments out there which are weak. We know the Australasian sector's weak. This is pushing now on the back of that China news. So these, China news affects the Aussie and the New Zealand. It's all in the Asian session. So you be careful with those. Aussie and New Zealand, because China's dragging that whole sector down. But I would say, obviously, pounds we want to be shorting. So New Zealand dollar, obviously weak at the minute. RSI extensions on this, we've had nothing to the upside, really, that we could get involved in on New Zealand dollar. So New Zealand dollar CAD, obviously CAD is strong, being dragged along with the US dollar. Not as strong as it could be based on oil, but I mean, it's still stronger than the New Zealand dollar. Everything is at the moment. So any kind of pullbacks you want to get into on these, you need to be looking at lower time frames because the trends are so strong. And looking at any kind of pullback opportunities to get in short, but very, very difficult to get in at the moment. Propulsion gaps with reversal alerts, that sort of stuff is all we can really look at, but they're hard to get into when they get really extended to the downside. New Zealand dollar Swiss, same thing, massively strong. The Swiss franc at the moment, we know they've really done good stuff with their rates. That correction, as it was a lovely short opportunity on a lot of these Swiss francs. I didn't take it because I didn't know how to read it, because it was good news for the Swiss franc as far as I'm concerned, and the market hated it. It was just a pullback. Couldn't see it. And New Zealand dollar yen will be a massive short. I've got a US dollar. I did have. I thought I had a yen short on. No, I didn't. Okay. I'm looking for a yen short, basically, to take on the funded account as a swing. That might be the one to take. Diamond took the New Zealand dollar US dollar ADR reversal last night. Hit target overnight. Yeah. Good one. So this was an ADR hit this morning, yesterday. We did 168 pips on a 95 ADR. So obviously anywhere from London session, basically, wasn't it? So anywhere from there, basically, was ADR reversals. So you had one there. You had one there, which obviously got stopped out, and you had another one. There. So yeah, nice entry there. Nice M pattern reversal. Actually, the reversal on mine is you can't really see it very well. It's because it's the overnight manipulation. This is the problem with the New Zealand dollar. It's all over the place. But if you look on M15, you would have had the reversal alert this morning on that one. That's because that probably didn't happen that high. So the actual reversal alert would have been on that high there, which would have been that candle there. So you would have got it pretty much the same time as that one. But anyway, yeah, that's worked out lovely, that one, New Zealand dollar, US dollar. Because we got the US dollar strength. So New Zealand at the moment, massively weak. I'm looking to get into a yen short, but I wanted something that was pulling back more. I haven't found anything really that I'm interested in. I'm not interested in US dollar yen. That's all over the place at the moment. Pound yen I am interested in, but I've got a pound US dollar short on already. These indices are absolutely collapsing this morning. Remember I said about that this morning, first thing I said, end of month manipulation. This looks like it. If you get trenders, don't get out, to stay in. I wasn't expecting it to be quite so fast and hard, but we're not far away from an ADR on that. So yeah, yen's obviously looking to get in short on all yen pairs at the moment. You can pretty much get into any of these. That's a nice one, the Swiss yen. That's probably the best of the lot at the moment because we pulled back into the propulsion gap. We can see the sellers have started to kick back in again, so that's a nice looking short. Oh yes, Diamonds just put the entry on that in the Telegram. So you got in on M15. That candle there. Lovely trade. And you got out there. Yeah, 40 pips. Nearly half an ADR. Very nice. We took the highs out as well. So perfect timing. Getting in on a reversal alert at resistance. What it's all about with these ADR reversals, don't just take an ADR reversal because it's an ADR reversal. Take an ADR reversal because it's done something. Taking liquidity, it's double topped. Hit a propulsion gap. You've got to have a backup reason. You can't just take a signal because there's a signal. You need to take a signal out of an area that makes logical sense to take a trade. Quick. So yeah, I'm just looking at that Swiss. I kind of missed it. I'm just going to take a Swiss yen short on the funded account. This is So I'm looking at from where we are now is 890 pips to the highs. So I'm looking, I'm going to go with 1100 to be safe. Just 0.5% risk. I'm just adjusting the settings on it. Trailer, target. Why is that not taking a trade? Bear with me a sec. Remove. What is going on? Oh, there's something wrong with this chart. So I'm just going to open another chart. Yes, Swiss yen. Stick up the Aussie CAD. 1100. 3,500 target. Sell. Thank you. Right, so that's 0.13 short. So I'm in short on that. Stops there. I put a 2,500 pip target on it, but what I'm expecting, the reason I'm getting into a yen short is I'm looking basically for the yen to power up tomorrow. So the Bank of Japan is going to announce their intervention tomorrow. The intervention is going to be powering up the yen. So you'll see obviously in all the yens we've had that massive push where the Bank of Japan announced its intervention. So we're just waiting for the intervention to kick in, which they're announcing tomorrow what that's going to be and how it's going to be executed. Highly likely to be bullish for the yen moving forward. So I'm taking a short on that. The target is 2,500 at the moment. Actually, I'm going to extend that because that's not. If we're going to get a big old move, we need to be looking at least 3,500. Just the TP on that. So yeah, it's a swing play basically. But I'm just looking for something to get into. The Swiss yen. The Swiss is quite strong at the moment, which is giving it that opportunity to pull back into this area. But obviously the yen is going to push a lot harder. And the money, when the yen powers up, assuming it's going to, the money is going to be pulled out of all other currencies to be pumped into the yen, and the Swissy will be one of the ones that's going to be pulled out of as well. So it doesn't really matter which yen you get into. I'm just looking for something that's pulled back. It just gives you a better entry, whereas all the other yens at the moment are kind of sideways, moving down still. So euro yen is a very good one to take short. Pound yen obviously very good to take short, but if we get any intervention more or any more news on the pound, this could strengthen. So that's probably not the best. And the US dollar is massively strong. So US dollar yen is a difficult one to take. So Aussie yen, New Zealand yen and Swiss yen or euro yen shorts, all good, but big stops. Yeah, long-term play over the next, well, as I say, it's a long-term swing, but we could easily get a 200 ADR hit on this tomorrow if the market likes the intervention. So we'll see. So that's all the euros covered, all the yens covered, rather. US dollar yen, no, that's just a strong against potentially a strong, so that's going all over the place at the minute. US dollar Swiss, light longs, still is a messy old pair. US dollar Swiss, very hard to trade, but you're okay buying anywhere down here really, but it's obviously already gone this morning, so you can't do anything with that one. New Zealand's we've covered, pound we've covered. So the euros, euro US dollars are short, as you can see, still a short. The intervention, the interest rate rises we're seeing in the euro are not rallying the market, at all. They are rallying the market a little bit. That was the market rallying into the rate announcement. That was the rate announcement, and this is the result. So as you can see, the market is not happy. Selling every pullback on the euro if you can get in. There's some nice entries. We've had opportunities on euro US dollar to get in short from the 4 hour, from the position trading perspective. It's just they seem to be taking a long time. So it's basically the US dollar. So I was just watching the DAX. Okay, so we just had a first bullish engulfing on the DAX. So I'm just going to do that trade. I'll just cancel that one off. 750. Okay. So it's the first signs of bullish price action. If it's not going to hold, that's fine. If it is going to hold, we should see some accumulation and a break, which will at minimum be a pullback. So if we get back into this area, it gives me a chance to break even on the trade, and then obviously add to it if we are going to run for that gap. So looking at it on a daily, this is the move I was looking for. The pullback, basically. So this is the pullback. Potentially some point down here, if we are going to do that today, we are obviously going to put a bottom in. So that's what I'm trying to catch, that bottom. Catch it and hold it, which means I need to massively up that. Looking for at least a gap fill on these. So yeah, we'll see what happens with that one. Where was that? Euro. So yeah, euro US dollar obviously shorts. Take any reversal alert short on that really, and you'll be pretty safe at the moment with the US dollar the way it is, and it's so strong. There's no news on the US dollar until the PCE tomorrow. PCE is forecast to go up, so anything better than that, we're going to get push. Anything as expected, we should get a push. So we should see a strong US dollar moving into the weekend. So like that one for shorts, Euro New Zealand and Euro odd, one or the other, don't take both. They're virtually the same. Yeah, pushing up. Starting to run out of steam now, Euro odd and Euro New Zealand. New Zealand is a lot weaker than the Aussie at the moment, as you'll see from the Aussie New Zealand. But yeah, the Euro New Zealand is starting to show the odd sign of a little bit of strength. I've just got in long on the DAX from the funded account. So I've probably just got in long here. Yeah, just got triggered into it. So we just tapped into that double top. So yeah, Euro New Zealand, we are starting to show signs of slowing down, but we are still pushing up. This was the area that I was really hoping we were going to get a decent reaction at. We broke back down, but we pushed back up again. So it's extended. It's been very extended over and over again. And Euro New Zealand and Euro odd are incredibly, with the odd and New Zealand are incredibly weak at the moment. Obviously, the euro is also weak, but this just shows you how weak the odd and the New Zealand are. If the euro, the weakest currency pretty much out there at the moment, is managing to beat these two, we know that they're a lot weaker. We just had that reversal alert on the DAX. So in long one. What's my TP doing there? Jesus. Because I've got such a wide stop, because I'm trying to build a position on these. Obviously want to look at taking out the high, so I'll just change that to 16. Yeah, just had the reverse alert there. So we'll see on that. I'm not going to add straight away. This is kind of, I'm trying to swing this. So I'm going to add as we get to strategic points, i.e. back above the opening range low for an add, which will bring my average up to there. And then I'll add when we break the opening range high, which will bring my average up to there. And then I was going to put one there, but if we are going to break the opening range high, I suspect we'll get that gap fill done. So that's the play this morning on the DAX. Yeah, you're odd, don't know. At the moment, we're sideways. If this China issue, well, I say China issue, China's been weak for a long time, but if they continue to drag the Asian sector down, we should still see the Aussie and the New Zealand be weakening. So difficult to tell with these two. They are very exhausted. And as I say, with the Aussie specifically, we are now going into balance. So selling the highs and buying the lows down there, potentially we're going to start to see that sort of movement. Any kind of strength on the Aussie and New Zealand, any good news out of the Asian sector, and we'll be good to go. But at the moment, they're weak. Euro CAD is a short, not quite as short as Euro US dollar. US dollar and the CAD quite often move in tandem. We got a lovely reversal alert on that, which has popped back down again. We've retested it, and we're just coming back up and retesting this level at the moment. The CAD's a little bit weaker, but I would be looking for short. So where we are now looks really, really good. On the hourly, you haven't quite got extended, but any shorts from anywhere around here really are good. So take reversal alert. If we just take out, yes, we have just taken out yesterday's high actually, but previous day's high, or sorry, previous day's high, weekly high is there. So if we take out the weekly high and get that reversal alert, that's a really good short opportunity. But shorting anywhere up here at the moment is pretty good. So I like this as a short. If you're going to position trade this, obviously you've got an entry there. If we do decide to push up to ADR and try and take out the previous week's high, you've got a second entry there. But you can see this is obviously starting to roll over and starting to weaken. The run up on this was based off of the Euro rate announcement. So we were like expecting strength to come through on the Euro. We got the announcement and the market went, don't like that. So we should start now to roll over. So shorts on the Euro CAD. Euro Swiss is a short. It's always a short. Swiss franc's always stronger than Euro. So trying to find an entry. This is the entry. This was a beautiful entry. That liquidity run. I because this candle spooked me. This was the news. This was the rate announcement on the Swiss, which I was expecting to do that. For some reason, the market reacted negatively. Well, we know why it reacted negatively. They were reaching for the liquidity of everybody that shorted with the same view as I've got, which is long Swiss. They all shorted it here. They came up and took their money, and then they went, thank you very much. We'll run with it, which is what they do. But yeah, should have identified that as a missed opportunity. Euro pound longs at the moment, but again, no idea. This is all based off of the pound. If the pound strengthens, that's coming down. So you have to treat this as just another pound pair. That's all the euros covered. More yens, obviously. Yen weakness, Swiss yen I've just covered. So I've just taken my first short opportunity on that one. I'm using a stop, obviously, on that at the moment because it's the funded account. But if you're position trading it, getting short here, if the Swissy powers up for any reason today ahead of tomorrow's news, you can take a second entry on this. That's roughly, yeah, obviously it's an ADR, you can see that. So yeah, I like it long, short basically. So assuming that we're going to get that yen strength coming through tomorrow. Same with the CAD yen. Shorts. And the Aussie yen, shorts. Aussies, same reason, same thinking as the New Zealand dollar basically. The whole Asian sector is weak, as we can see. So we're looking for short opportunities. We had a lovely pullback into that sort of consolidation, which we've reacted out of. We are pulling back into a propulsion gap after getting a reversal alert, though. So again, it's difficult to tell. We'd need an awful lot of strength to beat the US dollar at the moment. So trying to get in on this is very difficult. Remember, that's a lovely 3-bar reversal. Textbook 3-bar reversal there, look. Downward, pause, push, follow through. There's your trade. So yeah, we've had the reversal alert, but obviously this is in a massive downtrend, so you should be looking for opportunities to get in short. For me, I want this to be further up. I want to be getting in somewhere up here, but we're not getting anywhere near it at the minute. So quite possibly strength off the US dollar on PCE tomorrow, and this will come down again. So you missed the opportunity. The opportunity to get in was during the Asian session this morning as we took out those highs. So yeah, kind of missed opportunity on that one, but I was asleep. Aussie New Zealand longs, again, always long, have been long, not always long, but have been long on this for an awful long time. Aussie's stronger than the New Zealand, so when you've got two countries in a sector that are weak, the bigger economy will usually rule, unless there's anything that the New Zealand has a fundamental reason to be stronger, i.e. they increase their interest rates by way more than expected to get on top of inflation, or they have inflation forecasts come out as lower than expected. All that sort of stuff will strengthen the New Zealand dollar. So unless we get news to that effect, which we haven't got any forecast at the moment, it's business as usual on this one, looking for long opportunities. Bit stagnant at the moment. Everything in the market is stagnant at the moment because everything in the market is in massive fear mode because they've no idea what's going on at the moment with the yen or with the pound. So we're basically got the brakes on at the minute. But any kind of pullbacks on this, I'll be looking for longs if we can get them. If we can get a pullback, which I don't think we can. So you could long it from here. You know, if you're trading short term, obviously any kind of push down, take reversal alerts and try and get long positions on. So looks good for longs, but not from where it is. Could be good from where it is. We've got a lovely support, which is holding very, very nicely at the moment. So right now, within this 4-hour inside bar, looks good, doesn't it? So if you look at this a little bit closer up, we've got this support. So we pushed up into support, held it multiple times, slammed through it, came back down, retested it, and we're sitting basically on inside bars at the moment within this control candle. So likelihood is this range will break to the upside because there's a lot of buying power. So looks good longs at the minute, 5 minute. But the alert again was Asia. This is the problem with the Asian pairs. I'm asleep. You get all the best entries on the Asian pairs are in Asia, obviously. But this is what the EA is for. If you want to take these trades, you need to buy the EA so the EA can sit there and do this for you. But anyway, Aussie dollar, New Zealand dollar. Aussie dollar yen have covered. Aussie dollar Swiss is a massive short. Swiss franc's really strong. Aussie dollar, we know, is really weak at the moment. Very difficult to get into this. That was the entry. Again, liquidity run. Just missed it. See it. But yeah, shorts, very difficult to get into. I was waiting for this pullback. I was waiting for some kind of pullback into the 24.72 zone. Didn't get it. Didn't get in. And Aussie CAD, same thing, shorts. So the short was there. So I haven't been trading for the last week or so. So that would have been your entry. But it wasn't a 4-hour extension. It was an hourly extension. You did get in on... No, you didn't. You did. 23rd of September. No, you didn't. Didn't quite get the extent. I thought that looks, because it was so close on H4, looked like you would have got the hourly extension on that, but you didn't quite get that either. But you know, there was the reversal alert at resistance. There was the retest. Lovely entry, support resistance entry. But yeah, shorts, not in it. Missed the boat. So yeah, so that's every pair covered, I think, isn't it? Gold, for anybody that's trading gold. There's a lot of Bitcoin talk out there at the moment, guys. Don't be sucked in to it at all. I was watching a course on YouTube yesterday because I spend a lot of time wandering around YouTube, as everybody does. And I got sucked into this guy's channel, he's an old guy, Stat Oasis, who I I've known for a long time, who does strategy quant videos. And all of his ads on his videos, I was constantly being bombarded with these other ads about Bitcoin. And all these, there's a lot of ads and channels out there at the moment going on about buying Bitcoin. And the reason they are saying that is because they are seeing it cheap. Yeah, they're seeing Bitcoin down here and they're going, this is the opportunity of the century. Look at where we have been and look at where we are going back to. And they're like, you need to be buying it. Yeah, we're bottoming out here. This is tracking the US indices. Yeah, if you zoom in on this for the same time frame as the US indices, it doesn't take a rocket scientist to work out. This is doing the same thing as the US indices. It's fallen into line with the indices because it's not a tangible product driven by anything but fear and greed. And at the moment, we're in a massive fear market. This thing is not going to go back up to there anytime soon. We're entering into a recession. So don't fall for all this hype out there at the moment. It looks like it's bottoming out. I give it that. It looks like it's bottoming out. And the indices are still dropping. But for this to get driven all the way back up to there, we're going to need a lot of investment. Banks are have dropped this thing like a rock. Investors have dropped this thing like a rock because they've made their money. Yeah, the people that bought this and drove this up got out of it. This is a profit-taking move. They rebought it. They got out of it. They're done. They're not buying it up down here. If they were buying it up down here, they'd be bankrupt. Yeah, pension funds are not investing in this. So just be warned, if you see all these videos out there, there's a lot of people selling courses in how to trade this and all sorts of stuff. Just don't. There's a lot of people, as I say, I've said before, taking out loans to buy this stuff in bulk. It's not going anywhere, is it? If it was the case, this thing would be going up. It's not going up. Gold is a short based on US dollar. US dollar strength will drive gold prices down. The locking up of Russian gold reserves and the ban on export of Russian gold, who is the largest holder of gold, isn't helping the price. You would think again, and this is the same theory as oil, supply gets constricted, prices go up because there's less of it available. That doesn't seem to be happening. We're not buying up a load of gold at the moment because no one can afford everything. We're going into a recession, no one's got any money, so you're not buying up gold. We're not buying stuff that gold is made in. We're not buying tons and tons and tons of new tech because it's bloody expensive. We haven't got any money at the moment. Therefore, the gold demand from the tech industry is flattening out as well. So gold isn't something you want to be looking to buy at the minute either. Looking for opportunities to short it. But it's not something I position trade, so I don't really cover it in any detail. But again, it's just a US dollar cross. US dollar's bullish. So we're looking for shorts. And again, it's doing very much the same thing as oil at the minute. It's defying all supply demand rules and just doing what the hell it likes. So we have that, what looks like a support bounce going on at the moment, but doesn't seem to be doing that either. So I would still stay short on that with the indices. All the time the indices are bear, we're in a bear, all the time we're in a bear market. I would stay short on this. And I have to say, at the moment, it looks like you want to be staying short on oil. But OPEC intervention in that may well change that outlook. And obviously, we've just had that announced October the 5th, next week, next Friday, I think is the OPEC's meeting. Yeah. So next week, we will have new oil policy for the next 30 days. And we've got non-farm payroll next week as well. So We've got the New Zealand rates next week as well. So, I was saying about obviously, and obviously the Aussie rates, they come out together. So Aussie, New Zealand, Asian rates next week. So another busy week. We got the CPI for the Swiss. So that'll be when we find out what the inflation figures for the Swiss franc are, as to whether or not they're on top of it. They forecast it to be worse than expected. So we might get a little bit of Swissy weakness next week. We've got big news. Obviously, non-farmers just a spike, but we got big rate announcements from the Australasian section next week. So another big week next week for news, and obviously the start of a new quarter, run up to Christmas. And Christmas historically tends to be a bull market. So we're very interesting to see if we do get the bull run this year. We always do December. Yeah, there's December, and there is our bull run. We usually get a bull run starting in December, and the run up to it also tends to be bullish. So October is a bullish month typically as well. So very interesting to see what happens this. We are poised, aren't we, to start some kind of bull move potentially. This things could, we could get way up into the 200 moving average again. So there's plenty of room to the upside before the next leg down. But recessionary fears, etc., retail sales are going to be playing a big part in what happens with monetary policy moving forward, and interest rates, etc. So we could see this thing just come down and collapse again. But DAX trade is just sitting there festering at the minute. So we have had first leg. That might be second leg low there, looking for a new high. We may well come back down and retest a little bit lower than that. So we'll see, but looking for that bullish run. That's just the only thing that worries me about getting this gap fill today is we've now got to do over an ADR push just to get to the gap. I was looking for a bull day. We got an ADR hit just to get the gap fill done now, so it's going to be quite a tricky one for the DAX this morning. But we'll see what happens in New York. New York's rallying harder, so we've got much more movement, more positive movement in the US indices at the moment. Saying that though, the Dow is pretty much the same. So we'll see. That's it really for this morning. Nothing much else to discuss because I've pretty much discussed everything. So we'll see where we go today. Be aware, obviously, we could have something coming out of the pound, out of the Bank of England today. We've got GDP for the CAD this afternoon is the main news event, which the analysts will be looking at and adjusting forecasts on the CAD. We got loads of talking heads all day, so very difficult to tell what we're going to get from day to day at the moment, but keep your eyes peeled on financial juice. If you see anything moving, we need to know why it's moving. Yeah, tricky out there. And I'll start properly position trading. Oh, here we go. Obviously, the other thing this is potentially is pullback drop. So watch this space at the moment. We could well be just pulling back for a new leg down. Remember I said if we get those big trend days, we get end of month where it just goes and you get these huge ADR hits. They tend to quite often happen in end of month sell-offs and buys. This could be obviously one of those. So if that is, then obviously I'm just going to get stopped out on it. If we make new lows today here, I've been asked this before, why are you not flipping short and just taking shorts? Because I never short into support. So if this breaks this low here and becomes bearish, best case scenario for me is getting down to support before we get a bounce. So I would rather buy up support to get the gap potentially. So, timing is the one thing obviously we don't know. We can only take what we see with price action. So That's my second entry. ADR down there, I would take another position down there long. If we get a decent price action bounce down there, you know, this could well just be the pullback push. If you look at it from the reversal indicator perspective, yeah, what we're looking at now is that pullback and then break back above that level, and that gives us our retest arrow, which gives us our W. That's what I'm hoping is happening anyway. Obviously, because I'm long. We'll see. Right, that's it. So I'll be back tomorrow morning, 7:50, same time. I'll be in the Telegram group if you need me for anything. Indicator, EA, etc., etc. I'm doing a little bit more of my research today, which is why I got sucked into YouTube yesterday. I'm researching RSI levels, and I was I was looking at, I wanted to look up an algorithm basically to put into strategy quant to do some bulk testing on the RSI levels, which is why I got sucked into Statoasis's videos again yesterday. And it really is like an endless pit. Like the, what's that thing with the teeth in Star Wars? Where they go and Jabba the Hutt's barge and they try and chuck them off. I keep wanting to say Snorlax, but that's a Pokemon. Snorlax or something, I don't know, whatever it's called. But YouTube's like that. You get into a video and then you go onto another video and then you look at it and go, it's lunchtime, 2 hours. I found out what I wanted 2 hours ago and I've been sucked into, and that's basically what happened to me yesterday. Anyway, so I'm doing more RSI testing today using strategy quant to do that in bulk. And then next week, I will be back position trading again, I think, assuming that we've got some clarity on this pound and this yen, which is really what I need before I decide what I'm taking, obviously. So, all right, so have a good day, everybody. Hopefully it's profitable. I will be back tomorrow morning, 7:50, and I'll be in the Telegram group if you need me. Other than that, see you tomorrow. Or Peter's just said, regarding strategy quant. Go on, Peter, before I disappear, what's the question? Strategy quant, for those of you that don't know, is a quant development software. How to code last swing low in Algo Wizard. How to code the last swing low in Algo Wizard. Swing low. Well, the only thing you can do is I'm just trying to think. Let me just load. Why have all my files disappeared? Sorry, bear with me a sec. Just trying to find. Because this is my new PC. They're in a different place. I don't know is the honest answer to that one, Peter. I'll have to get back to you on that. I'm just trying to. Why is it not creating templates? I'm not sure what's going on with my Algo Wizard at the moment. It doesn't seem to be loading any of my settings at all. I'll get back to you on that. Basically, last swing low and last swing high, you've got to pick a look back. So you need to look back to the lowest low or highest high in X candles. That's the only way really to do it. That's the way that I do it anyway. So what I usually use is the daily chart. So I use daily candles and pick the last X candles. So for example, on the daily here, the last swing low is obviously there. So you would pick, it depends on the time frame, but you would, if you picked 15 candles, for example, that would be your last swing low, and that would be your last swing high, because you're going from this candle back 15, that's 18, 16, that's 15 there. So you'd have to go 20 on in this case. So it's actually very, very difficult. There's no right or wrong. And when you're doing algo development in there, it's good to have the look back as a variable so that you can run optimizations on it. So you can say, show me what the best entries on a pullback low or high are, and use candles 1 to, or you don't use 1, you'd use something like 5 or 10 to 50, and you'll be able to optimize what is the best for that particular instrument. That's how I did the last candle for stop loss in Price Action Toolkit. Yeah. So it's a look back. So with that, it's the trailing stop here. Trail stop behind candles instead of points. So if you set that to true, that is your look back. So if I had that set now to 2 and I'm long, it would look to put my trailing stop there. Obviously, if price was a positive, but that's where the trailing stop would be. So as we move into the next candle that say paints like that, the trailing stop would move to there. And then if it pushes up, it would trail to there, up there, up there. And that is really your swing low. That's not your swing low. So low is 1 instead of low 0. Yeah, so low 0 is the current candle. Low 1 is the last closed candle. In MT4. In TradeStation, it's different. But MT4, yeah, that's that one. It's really hard. Swing, because I've written here, for example, in the Price Action Toolkit, I've done exactly the same thing for here, look. Last 5 candles, or last 60 candles. So the idea behind this is 5 minute, 15, 30 minute, and 60 minute. So you want to draw in the last 60 minute and the last 5 minute. Yeah. So there's your 5 minute high and your 5 minute low. There's your 60 minute high and your 60 minute low is there. So this is the lowest low in the last 60 candles. There's your 60 candles. There is your 5 candles there. But you see, picking 5 does not give me the swing low. The swing low is there, but this is the low in the last 5 candles. So if I use the low in the last 10 candles, or rather in this case, we could only use 15 on there. Now it will give me the proper swing low. So I change that. Yeah, so there's your swing. So your swing low is basically the same as that one, same as the 60. But it's, you know, it's just it's a very, very difficult thing, because obviously it changes. It's a real struggle to do swing highs and swing lows. It's something that, you know, whenever you see these indicators or EAs out there that are automatic support and resistance, or automatic channels, or automatic fibs, every single one of those is working on trying to find the swing high and the swing low, so that it can draw the support and resistance, it can draw the fib extension and pullbacks, and it can draw X, Y, Z, it can draw the channels, but it has to have a look back. And the look back is how many candles back you want to go to draw your thing. And, you know, in this move here, if you had your look back to try and find the swing low set to 20, 30 or 40 candles, all it would do is it would drag a line like this. It's not a swing low. It's just the lowest point in the last X candles. So it's a very difficult thing to do because the market changes all the time. You kind of need to code a sort of dynamic indicator that says if the ATR is a certain level, then you want to use a further look back or something because you're probably more in a trend. You've moved further, faster, so you'd want to go back that way more. If it's ATR is very, very low, you're in a range, you could probably use a much smaller amount of candles. It's a real impossible thing to get right, unfortunately. So yeah, it's not easy. And coding it is not easy either. Just notice that does not remove those when you undo the EA, which is interesting. I need to get that changed. But yeah, it's a struggle. And in strategy quant, it's a very difficult thing to work out. But I've been running loads of price action EA creations at the moment as well. I'm running lots of RSI based ones at the moment, so using literally just using RSI in here just to find what I'm not looking for profitable strategies. I'm looking for high strike rate and movement. So what I'm looking for is getting into profit. What RSI levels at the moment in the last 18 months have been working the best, because I'm looking at potentially adjusting my RSI levels possibly on you know, market conditions change. The 21 and the 14 that I've been using for years was great and has been great and is still pretty good. But the thing is, the market volatility now, for example, S&P is a prime example. You look at the market volatility now, it's, you know, where we are now, you know, we're getting these big candles, which are 215 pips. Go back to last year, your average candles were like 21, 12, 22. You know, if we had the odd big day where you might get 60, 80, 100. Now, you know, 130 is pretty much the norm, isn't it? So volatility is much higher. Relative strength is stronger. So we're getting two levels, but we're getting embedded longer now. And I've noticed this on a lot of the FX pairs as well. We're going into a lot stronger moves, which start much stronger trends than we're used to. So I'm just looking to see, mainly for entries on the hourly, if there's better ways to get into the hourlies using different RSI levels, which is what I'm running the optimization on. So 14 is slightly better. I'm finding at the moment, but I'm running the strategy quant across all instruments just to see what improvements on the strike rate are. And I'm also looking at, I'm doing an analysis to give me a count of candles from extension to drop. So how long are we embedded for is the important thing for me, because what that is a squeeze. So I need to know, yes, you might be getting me in with a higher strike rate, but are you squeezing me more as well? Because I do not want to get into squeezes. So if I'm finding that I get a very good strike rate for 80% of the time, but the squeezes are lasting 3 to 4 times longer, that is not going to be good from a position trading perspective. So I would rather wait for opportunities to come with the RSIs that I know work historically very well than change. And obviously then market conditions suddenly change and we're stuffed. So I'm just running all that analysis, but I'm running it on the last 18 months because the last 18 months is where we've seen the volatility really change. Since obviously Christmas, when we started this downward move here, the last 12 months we've seen much bigger volatility on the indices, but in the stock market since we started coming out on the stock market, in the FX market since we started coming out of COVID, we've seen a lot more trending, a lot stronger trends. So just trying to, it's good to do it, and I might come out of this analysis at the end and go, 21 and 14 I think still are the best to use. And obviously you can change it, you can use your own. If you decide, no, actually I like the 21 better or the 7 better, for example, that's fine. Just be aware that you're going to get in more signals. The more signals you have, the weaker the signals are, therefore the weaker the quality of the trades are. So yes, you may have a run of 3 months where you have way more trades and you make way more money. But when those squeezes come, those squeezes will last too much longer and that will hurt you more. So I've got to be careful, which is why, and that's where strategy quant really comes into it. I can run, I don't know I'm not going to start this now because it will completely eat my bandwidth, but, I can run 100,000 strategy tests an hour for every connotation I could possibly think of to do with the RSI. So, and then obviously all that data is in here. So I can see equity curves, I can see everything. So that's what I'm doing at the moment. And I found some pretty decent strategies actually as well. While I've been testing price action strategies as well. There's a lot of these have got big stagnation periods as well, but overall they're very, very, very good strategies. Just need to find out what the stagnation is and see if I can put a filter into that, or ease those out a little bit. But yeah, that's made $1 million. How is it? 100 grand to $1 million. Obviously, all in sample and out of sample tested as well. So it's very, very stable in sample and out of sample. What's happened there? Didn't see that one. I haven't really looked at this yet. So the high, so these are running on daily. So the daily high is lower than the daily high from 9 candles. There you go. This is a prime example of look back. This is using look back. So what this is saying is the high today at the close is higher than the high from 9 days ago. Yeah. Go long. What's that? Breakout. It's a simple breakout strategy. Yeah. And the short entry is the low is lower than the low of 9 days ago. Yeah. The exit signal is when we close, the main chart is greater than the close of 2 candles ago. So what it's saying is when we've got this breakout, as we push up, if 2 candles come back and close below the low of 8 candles ago, get me out of that trade. Works very, very well. And you can see there's some outliers in here as well. That was obviously a massive, massive strong trend somewhere around 2015. US dollar Swiss obviously went nuts in one direction or the other, and it made a very, very nice profit. Yeah, I'm looking at all of these. All of these can be optimized. Don't take trades on Thursdays or Wednesdays. All of a sudden, you're left with way more profit. Could be a good short only strategy. Mondays, Tuesdays, Thursdays and Fridays are profitable, not as profitable Wednesdays. So there's optimization that can be done on these as well. Good strike rate as well. I like this one. we're going to have to do a little bit more analysis on this. 58% strike rate, drawdown, 17% drawdown. Can sort that out. Anyway, but to answer your question, Peter, yeah, I don't know the look back parameter. I've never tried to code it in there. Algo Wizard, to be honest, I don't spend a massive amount of time in Algo Wizard. Most of my time is spent in the builder. And then what I tend to do is grab these out, all these strategies when I've got them. I export them as MT4 EAs, and then I optimize them in the strategy tester. So anyway, Laguerre RSI is supposed to be an excellent indicator for profitable STRS. Yeah, market is really different. Yeah. The Laguerre RSI. I'm not familiar with that. We haven't got that, have we? In here. Oh, yes, we have. Oh, I've never tested that. Changes direction is falling, crosses above below. So it's pretty much the same as the standard RSI. It's obviously got a different calculation. Changes direction, crosses above below, falling. It's higher than level. You don't get that in Laguerre, do you? Higher than level. So that's missing, the higher than level. So from a mean reversion perspective, you can't test that with that RSI. You can only test crosses above or crosses below. You can't test is above or is below. There's some new indicators available on SQX site too. Is there? I haven't looked. I'll have a look. I haven't used Strategy Quant for a while. It's just because I was doing this testing on the RSI. You know, just to speed it up, this thing will do it for me in a couple of hours, whereas I will do it in a couple of weeks. Strategy Quant's awesome for that sort of stuff. Just getting statistical data. If you want to know, you know, odds of RSI extensions, odds of ADR extensions and stuff, strike rates, you know, you can just get this to do whatever you want, and then all that data's in there. I quite like this strategy. It's got two outliers there. Look, $250,000 on 2 years, 3 losing years. But for a portfolio EA, that's I'll have to robustness test that one. What strategy was that one? Just I don't want to lose it. 110.59. Where'd it go? Oh, I'll mark that. Retest that. I'll retest that and run that on Monte Carlo. Anywho, yeah, sorry, I've got diverse on a tangent there. I got back into it last month, quite keen on getting strats for indices. Yeah, that's what I'm looking. Well, so that's also what I'm looking at. What I'm looking to develop is some because I probably told you I used to run the S&P 500 as my pension fund. Pretty much the same as all the big traders out there, you know, Judah Paul and all that lot. And what's his name? The richest bloke. Brain gone. Anyway, but basically just buying the dips on the S&P. So my investment fund, personal pension fund that I run was run off the S&P. And as I said, I turned it off here because we started making a loss, so I was out. I haven't been running that account. So what I'm looking to develop is also within Strategy Quant is some end of day, which is what you've got running here. So these ones you can see in the builder here, these are running end of day. So the only settings that I have, you see there's no indicators. The only indicators that are running are close, daily closes, lows, opens and highs, and is greater than, etc., etc. So that's why these strategies are based on lookbacks. So what I'm looking for is if we have had 2 daily closes to the downside, if I buy the next candle, how many candles do I have to wait before I get a profitable move? Hathaway, yeah, that's one as well. So I'm running strategies, basically just literally nothing but price action on the daily chart. So these are daily investment vehicles, and I'm not worried too much about the equity curves on them. Obviously, it's nice to have a bad equity curve, is it? It's nice to have a nice equity curve, which is kind of like that. But obviously, I'm going to have down years, and that's fine. I've had down years in the S&P before. That stagnated right at the end, which I hate. Hate the last couple of years stagnation. It just means it's final. But yeah, that's kind of what I'm doing in here. I'm looking for price action strategies. That's pretty good equity curve as well. But I haven't found anything yet in this run that has got a stagnation less than a couple of years. Wrong one. So minimum stagnation. Oh, that's year and a half. Made $1 million. This is over a decade as well, don't forget. This is not get rich quick. This is an investment. EA development, not buy a Lamborghini in 6 months. But yeah, so that's what I'm struggling with at the moment. I'm trying to find something with less than a year stagnation, which I don't mind having 1 or 2 years loss. That's I'm not particularly worried about that. But what I'm also trying to avoid is these outliers. I don't want outliers. I want something that's fairly... This is pretty stable, actually. Only one outlier in it. Maybe 2. Yeah, 106 to 2 months back to back made all that profit. That one made all the money in January and April. Well, that's pretty stable as well. That might be a good one as well. Retester as well. So I'm just doing stuff while I'm talking to you. But yeah, so that's what I'm doing. I'm looking for price action, and these strategies are not based on any indicator, which is why I like them. So it's literally what happens if this thing comes down 3 days on the trot and I buy it. Would I make money? Yes or no? That's what I'm looking for. So there's no technical indicators to cloud judgment. It literally is a price-based system. And all it's doing is looking at this, what happens on a day-to-day basis. If we have a bear day, followed by a bull day, followed by a bear day, if I was to buy the next day, if it was a bear day, how many days would I need to stay in the market to get out with a profit? That's the strategies that this is creating. It's just creating loads of look-back strategies based on open, high, low, close. That's it. There's 4 price points. So is this open, high, low, close different to this open, high, low, close by X amount? If so, by. If, and what I will start to do is use moving averages to filter to try and improve them. Really good way of doing strategy development. For long term, obviously, this is all daily. Everything's running on the daily charts. But yeah, I got loads in there. This was only running for about 3 hours yesterday. Get one of these. A lot of them will be the same or very similar. So this is the issue at the moment, is I can't get much over these stagnations. And if I put the stagnation, if I stick stagnation in here, which I had this running at stagnation of 300 days, can't find any strategy. So I might leave it running overnight and see if I can find some really decent low stagnation strategies. But you see most of these, like, that's 1, 2, 3, 5 years of loss. Can't run a strategy with 5 years of loss. Got to turn it off before that. So there's my issue. And to be fair, everything I developed in the past with strategy quant, that's always the issue, stagnation. But the drawdown's pretty good. It's, you know, when it stagnates, it doesn't lose masses of money compared to what it's made, obviously, because, you know, you can see that the overall profit is good, 668,000. You know, if you say to most people in 10 years, would you be happy earning $66,000 a year? They're going to say yes, aren't they? I'd be very happy. And this is just one strategy on one instrument, don't forget, as part of a portfolio. So it's a pretty good return. It's just, you know, it's trying to make it a little bit more consistent. So I'm happy to take less trades. I just want you to find me the better, less stagnant ones, which is the ones like this. These are pretty good. But this is what most people can't see past, you know. If you stuck an EA on a chart and it lost for 3 months on the chart, 99% of people are going to turn it off. You know, if after a year you'd run it, it lost 46 grand, you'd turn it off. Little would you know that the next year it's going to make that. You know, or that, for example, because that's 2010. And then in 2011, you made near enough $250,000. You only lost 20 grand. So the drawdowns, you know, these drawdowns relative are very small. They're good drawdowns. $6 average drawdown. It's just trying to get this stagnation column sorted, which is my real struggle at the minute. Anyway, but this is why I went down a rabbit hole yesterday. So, you know, I came in to do RSI testing, started the RSI testing, got all the data out into a spreadsheet, started analysing it, and then went down a rabbit hole and started doing this. So today my job is to properly do the RSI analysis. But anyway. But yeah, good luck. Strategy Guys, it's absolutely brilliant bit of software. Anybody that's not got it. It's expensive. You're going to be paying $1,600 for it. But hey, if you want to generate 200,000 strategies an hour, fully automated with profit curves, and there's nothing else out there that will do that for you. Very, 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 very useful. Right, DAX is going nowhere. I'm going to give this a little bit more time. If we are doing that in the next 20 minutes or so, I'm going to scratch it. It's just not really getting any traction from down here. So I still like the long, but we're not going anywhere. So I'll update you on that one in the Telegram group as to what the outcome is. But right, guys, so I'll leave you there. Anything you need, let me know. If you've got any strategy questions, obviously, just check them in the Telegram group. I'm not amazing in strategy quant. I know a lot about it, but the coding side of things in strategy quant is kind of, I go onto YouTube a lot of the time, so I don't use it enough in that bit. So, but anyway, that's how you do it. So good luck. Let me know if you crack it, Peter. I'll be interested to know, because I might use it. It's a good thing to have. But I can code it in MT4 in minutes, so that's why I did it that way, because it's easier for me to do it in MT4, to be honest. Anywho, I'll let you go on. I will be back tomorrow, and then we'll see you then. Have a good day.